What's up, guys? I hope you enjoyed your Labor Day weekend. It's Twix Trades back with another video, and today we're going to be talking about crypto treasury stocks. I'm going to explain a little bit about what they are, what the risks are, and then I'm going to show you what I think is the only crypto treasury stock you need. So, without further ado, let's get into the video. So first, what I want to talk about is crypto treasury hype, or sometimes what's also called is the infinite money glitch. So basically what this is declaring a crypto treasury strategy, and they will either raise money through debt or equity to buy cryptocurrency, usually Bitcoin or Ethereum. Why do they do this? So number one, they can create leverage through this, meaning that the stock itself will move more than the cryptocurrency it's holding, since they're using that outside debt to fund purchases. Now, this means they also have to pay interest on the debt, but since they're a public company, they can get better interest rates on that. But what's key here is that to have this be successful, Bitcoin or Ethereum or whatever crypto has to rise by more percent than the interest on the debt to make it worth it, essentially. And another thing to know, a lot of these are crypto miners, and some of their profits expand with the rise in Bitcoin, since they get Bitcoin for mining the new coins, and the fixed costs stay the same. So once profits get going, they can go up pretty fast and with pretty good margins if Bitcoin stays high. Number two, there's more opportunity for other entities to invest in crypto. So usually funds and 401ks wouldn't be allowed to invest in crypto, but through these strategies like the crypto treasury, they can buy these public companies and get access to crypto exposure as well. Now, a lot of these companies have an underlying business, and this gives the option for multiple expansion, especially if it is a good business. But you'll find a pattern with some of these. A lot of them are loss-making companies that have a crypto treasury strategy, and they're worth a lot more than the underlying business. So now let's just talk about some of the companies that currently have crypto treasury strategies. Now, the poster child for crypto treasury strategies, kind of the company that started it all, was MicroStrategy. And we can see here they were a loss-making company for a long time, but then most recently we can see that net income skyrocket. That's because of their crypto strategy, and we can see their returns too, definitely outpacing the S&P 500 by a wide margin. And they basically rose with the price of Bitcoin. They've been gathering it for years. So also want to talk about the man behind MicroStrategy is Michael Saylor, and his whole thing is the Bitcoin yield. So basically what this means, if the firm can issue stock above its net asset value, which is basically the price of Bitcoin and their cash minus their debt, and buy more Bitcoin than the share count dilutes, then the Bitcoin per share rises, essentially. Now, this is a little bit misleading. They would need steady capital for this to happen, so it doesn't really take into account the cost of that capital, which is share dilution. They issued a lot of preferred shares, so there's dividends on those preferred shares, and then there's interest on the debt that they get. So it's not exactly a Bitcoin yield. They basically just want the price of Bitcoin to passively rise over time to keep this going. Now, another one is Morrow Holdings. We can see they were also a loss-making company until the price of Bitcoin started to rise recently. This one's been a little bit depressed. There's been a lot of insider selling in this company, but they are also another company that holds a lot of crypto treasury. And here's just a look at the selling from it, and some of it's pretty recent, just a couple weeks ago. Another one is Riot. So this is a Bitcoin miner. We can see the losses, and then this year they became profitable. And they also sell infrastructure for Bitcoin mining. So with what I talked about earlier, their fixed costs stay the same. So if the price of Bitcoin continues to rise, they could get pretty good margin expansion on that. And we can see during the first bull cycle back in 2021, they did very well. Now, this hasn't exactly translated to now, but we can see there's about a 50% gain since the kind of middle of 2025 right there. Another one is Metaplanet. They're another loss-making company and are primarily a crypto treasury company. Now we can see this year, since Bitcoin's risen a lot and they have a large crypto treasury, it's risen by almost 300%, which is pretty good. Now we see that it's gone back a little bit from highs. Bitcoin's also fallen a little bit from highs, but we can see that it's kind of leveraged that extra percentage, that Bitcoin return, it's definitely magnified in some of these stocks. And here's another one. This is a Ethereum crypto strategy company, and we can see they're a loss-making company. They're worth about like $9-10 billion, and they only make $3 million in revenue. So this is just a crypto treasury company essentially, and we can see here that during those spikes or during crypto bull cycles, and I think the most recent one was when they announced to buy even more Ethereum, like billions and billions of it. And it's worked out pretty well for them so far, but to continue funding that, the price of Ethereum will need to continue to rise with that passive yield. Now here I just want to highlight some of the risks that these strategies have. And first I want to talk about MicroStrategy, which we can see here is their shares outstanding, and that is just about tripled in the last 5 years. So this dilutes shareholders a lot, and it's grown a lot. We can see recently those green bars on the bottom, it's risen by like 60% last quarter. So they've issued a lot of equity. Now, another thing, if we look at MicroStrategy's balance sheet, its current assets are less than their current liabilities. So I'd be worried almost about a chain reaction where they sell some of their Bitcoin to cover those current liabilities, or they may have to take on more debt, who knows. But if they did use Bitcoin, I'd be concerned about a domino effect with retail investors panicking over something like this. It just takes one thing for the ball to kind of get rolling, especially with something as volatile as crypto and speculative. So something to look out for on their balance sheet. Now, here I want to talk about net asset value. This is pretty important for some of these companies. So essentially for MicroStrategy, what you're essentially doing is paying $1.40 for a dollar of Bitcoin. Usually paying like $2 for $1 something is never a good idea, but that's what these companies rely on, and to keep that going, the price of Bitcoin has to keep rising, and they have to keep buying through debt and equity offerings. And on a fully diluted basis, I think it's somewhere around 1.5, 1.6 NAV. And we can see some of these other companies are closer to 1, so that would mean their price is pretty in line with the thing that they are holding. Now, stuff like Riot, they have their own underlying business where they sell mining equipment, and we talked about the upside there. So if Bitcoin continues to rise, their fixed costs stay the same, and they make a pretty good profit off of that. Their guidance, which was that they would only issue equity above 2.5 MNAV. So this could be problematic for investors because it'll dilute their holdings even more. And here, I just want to make a comparison between this and the dot-com bubble. If you see here, these are all companies usually loss-making, and when they announce a crypto treasury strategy, they skyrocket. So you can see those large spikes there, and that's kind of similar to the dot-com era where people would just put .com at the end of their name, and the stock would spike as well. So something to look out for. It's not every company, but there are a lot of them out there. And now let's get into the one crypto treasury stock you need. And I think it's great. It has a great underlying business as well as a great strategy. So first of all, I want to look at their financials a little bit. We can see there they are a loss-making company, but they are getting close to profitability. They're actually projecting profitability next quarter. And we can see here they lost $3 million last quarter. And if you look at the quarterly, it's been getting closer and closer. So a good trend I'm seeing. And they just got rid of their biggest cash burn business, which was Phase Media. So a lot of room to cut costs and make it profitable. And this is their stock over the past year. We can see that spike. That's when they announced their crypto treasury strategy. And when I first found this stock, I was a little concerned about the dilution from what they're raising. And I also just thought they were like any other crypto treasury strategy company. But when I looked deeper, it turns out they're actually not. And we'll talk about some of those differences. So this is what originally encouraged me to buy and really take a look at the stock. And this is the share buyback program, which is to acquire up to $5 million worth of GameSquare's common stock while it's under $1.50. Now this shows me the company believes there's 100% upside already, and they don't think they're fairly valued, which makes me feel good as an investor. Now, I just want to highlight stuff from their quarterly results. I was on the earnings call. The CEO sounded really bullish. Although any CEO would, but I really believe him, and I think the numbers say the same. So profitability targeted for next quarter, that would be huge. And revenue growth, enhanced margins, reducing operating expenses. So let's get in through the second half of 2025. And yeah, they launched their Ethereum yield strategy. Now, what's different about their strategy is they are partnering with Dialect, which is a Swedish kind of crypto firm, and this allows them to use their coins for staking and like verifying other coins. A lot of complicated crypto stuff. But essentially, they're using the coins, putting them to work, and targeting yields of 8 to 14%. Now, this would be not including the passive gains they've already gotten since Ethereum has risen since they bought it. And we see that there are almost 20 million in unrealized gains. And we'll be seeing some gains from the on-chain yields with their partnership, which is very unique. We haven't seen any of these other companies do something like this. And through this partnership, they're not just relying on passive yields, they have real value out of this treasury. And then 60% of 2025 core revenue expected to be in the second half of the year. Tariffs scared a little bit of their contracts, but they will be coming to fruition in the second half of the year, as the CEO talked about. And it's also seasonal as well. And yeah, as it says there, opportunities that shifted out, that's some of those contracts, and they will be closing soon, hopefully, which will add to that revenue and speed up their timeline to profitability. But what's also important is they've identified additional 5 million in annualized savings that are going to be contributing, and this just further encourages the agenda that they can get profitable for third quarter. And here I just want to highlight some more contributing factors. We see that insider ownership at 22%, that's pretty high. And then also key investors, Jerry Jones and John C. Goff. So those are pretty important people just in general in the finance world, and it's great to have them on board as well with something like this. And now I just want to talk about their MNAV. So we can see over there it's 0.8, and this essentially means for 80 cents you're putting into the stock, you're getting $1 of Ethereum that they're holding. And we can see how much gains they've had. They're going to be getting that 8 to 14% on-chain yields as well. And they also diversified with some NFT holdings as well. Overall, I think GameSquare has a lot of upside value, especially if you consider its low MNAV. Both its organic business and the crypto treasury are undervalued, which I think we'll realize in this next 6 months it should go up a significant amount. If you want me to do a deep dive on the valuation, because if it does become profitable, the price to sales is really low, and so will the PE be as well. So if you enjoyed this video, make sure to like and subscribe, leave a comment on what you want to see next, and have a great day. Thank you.